Are you the kind of person that is struggling with managing running trades? Seek no further, then I believe this video is for you. So in this video, I'll be demonstrating to you how to effectively manage your running trade with a stress-free, logical plan intact. So maybe you're the kind of person that is struggling with managing running trades, like you do not know what to do, you do not know when to add your stop loss to break even, you do not know when is the right time to take profit, and you do not know if you should actually swing the trade or should you actually scalp it. So I mean, like, if you're facing all of those problems, then you should stick around because I have the best tips and logical advice to provide you to improve your trading even better. So you are indeed that person that is struggling to manage his running trades. Like they would say in Dutch, er is geen vuiltje aan de lucht. What did I just say? There's absolutely nothing wrong with that. We all need to go through the learning process of fail and repeat. It's all part of the trader's journey. Even I had to deal with those struggles. But over time, I managed to construct a very logical plan to solve this issue. And now that I've solved this issue, I want to share this information with you guys instead of gatekeeping it. Because the more we share, the more we gain. So to effectively manage your running trades, you need to understand market structure. But I will only likely go over it because I do anticipate that you already have a fully understanding of market structure. And having a complete control understanding of market structure will basically be your guide to effectively manage your trades, which I will demonstrate in the next chapters.
Now, why do you need to have a solid understanding of market structure? Understanding market structure will give you a better insight on how to manage your trade and when to exit it, or take profit, or even add stop loss to break even. Well, to understand market structure, you need to be able to identify when the market is trending. When the market is trending, it will be creating higher highs and lower highs. So on the chart, it will look like this. So, for example, this is a previous high. Where is this texting tool? This is the previous higher high. So whenever you see that the market is creating new highs every time, that means the market is bullish, you know? And these right here are the new higher lows that are being created. I won't go very deeply into this. I can maybe do it another chapter, but before continuing the video, you do need to have a solid understanding of market structure because it will eventually help you into managing your trades even more effectively. So one of the most important thing is you need to be able to identify when the market is trending. Why is it important to identify when the market is trending? For example, let's say you have managed to get into a buy trade around here, and wait, let me get this long tool in place. Let's say, for example, I'm looking to enlarge in it. Let's say, for example, like when the market is bullish, like the obvious thing for you to do is to buy in discount closer to a demand zone. And your stop loss would be obviously below this low right here. And let's say you're in a long trade, you have successfully identified the trend that you are in, and if the trend is indeed bullish and you want to fully capitalize on the trend, then you need to move your stop loss according to the trend. For example, now that the market is in discount, you have entered into a buy move, and the market has created a new higher high. But when the market has created a new higher high, like when do you add your stop loss to break even? Technically speaking, with the thing that I'm about to show you. Well, when the impulse move has happened, in my point of view, according to my plan, you cannot add your stop loss to break even yet. Why? Because the structure doesn't support it. So I mean, like if the trend is indeed bullish, you will see IDs on the chart to support it. So usually, when the market has created a new higher high, you'll be then getting a new pullback. When you have gotten the pullback and the market has then again created a new higher high, and you want to fully capitalize on the full move, like you don't want just this, but you want more than like 600 tips, then you can use this strategy to potentially get all the full move. So when the market has created new higher high, then this low right here, the new higher low, will become your point of interest for you to add your stop loss. So now that the market has created a new higher high, then you'll be adding your stop loss to then you'll be adding your stop loss below this low to eventually capitalize on the full move. And you will also be very stress free because even if the market decides to give you a bearish reversal, you do know that you will be stop out in profit and not in drawdown. You see? So if the market decides to go below this low and change it into a bearish trend, you do know that you will be stop out in profit and you won't basically care, you know. And the same things go for the when the market trend is bearish. For example, you have entered into a sell, but then again you're asking yourself, when is it time to add my sell trade into break even according to the strategy that I'm going to show you guys, because you want to fully capitalize on the bearish trend. You don't want to get out too quickly, and you don't want to take profit too quickly. So like, when is it time to add your sell trade into break even? Well, then again, you need to look for structure to support it. For example, if the market trend is really bearish, then after the market has created a new lower high, this is the new lower high, and then a new lower low, then you'll be moving your stop loss to this high right here. Then you can fully try to capitalize on the full move, because you know when the market is trending, it will give you a whole bunch of pips. But most of the thing that people struggle with is adding their stop loss to break even, not knowing when to do that, not knowing when to take profit, but they still want to capitalize on the full trend, but they do not have a clear plan to capitalize on that. So I'll be showing you guys it on the chart on how to do it. So for example, we'll be managing our trade on the 5-minute chart. We're looking for a long move. Let me play this. I'll play it a little bit faster. Okay, so now the market trend is bullish, and you'll be trying to get into a long move around here. Let's say you'll be buying around this area. Let me just analyze it on the 50 minutes to get a good entry. Let's say this fair value gap will become my entry area, and I'll be managing the trade. Let's say, for example, on the 50-minute time frame. And I do want to capitalize on the full move. Like, the full move is around 400 pips or like 500 pips, and you want to capitalize on the full move. But like, you are someone that is struggling to manage when you are in a trade. You do not know when to exit. You do not know when the right time is at the break even, because like, when you do not have a clear plan, you will at your stop loss to break even and then get stop out early, and that is very frustrating. And I will show you guys how to actually solve that issue. So for example, you're going to manage your trade on the 50-minute with a 50-minute structure. Like, now you have gotten the reversal point and you're waiting to get into the long move, and now you're in the long move. When is it time to add your stop loss to break even according to the technical structure? So now the market has created the new higher high. This is the new higher high. So you need to wait for the market to then again create another new higher high. So when the market has then again created another new higher high, just wait for it to create it. Okay. So now the market has then again created a new higher high. So now you are safe to add your stop loss to break even. You are safe to add your stop loss below this low. You don't need to be scared anymore that the market will come below this low. You see, and you can fully try to capitalize on the full move. And every time the market creates a new higher high on the 50 minutes, you will be placing your stop loss below that low. So look at that here. The market created then again a new higher high. We're going to be creating the new higher low. Let's wait. Okay, so the market then again created a new higher high around here. So now you will be moving your stop loss to this low. You see, this is how you can effectively manage a running trade and fully capitalize on the full move before the market reverses to the downside. And now, even if you get stop out, your position would be, even if you get stop out around this area, you would be around 200 pips in profit, because you want to fully capitalize on the trend, because the trend is bullish on the 50-minute. So now you'll be doing the same thing until the bullish trend is over, You'll be placing your stop loss below every new higher low when a new higher high is created. And now your stop loss is here. The market has reverted to the downside. You see? Even when the market has reversed to the downside, you still manage to catch a handful amount of pip according to this strategy, according to a simple market structure strategy concept. So even though you might get stop out around this area, but you managed to bang around 360 pips. You still wanted to capitalize on the full move, but like you didn't get to capitalize on the full move, but still you managed to capitalize around 360 pips. Like normally, some people, even when they're like 360 pips in profit, their stop loss will be still around here. And like, what if the market decides to reverse in one hit to the downside? That means you literally made nothing because you holded the trade for a very long time to eventually make nothing. So this is the kind of thing that I want to bring out to you guys to understand on how to effectively manage your running trades.
Trusher will basically be your guide to effectively manage your trades, which I will demonstrate in the next chapters.
Now that you have a full control of market structure, you need to now identify what type of trader you are. Knowing what type of trader you are will be a key point to managing your trades effectively. But why is it important? Is the main question. Well, it is important to know what type of trader you are, especially when it comes to taking profit and adding your stop loss to break even. Not having a solid understanding of what type of trader you are will affect your trading behavior tremendously, which will eventually lead to losses on the long run. And we absolutely do not want losses. Losses is our kryptonite. So there's a time when we need to become successful, but success won't be reached if you do not work on these small things. Like the moment you start ignoring this type of thing, the longer your journey will take.
So you are indeed a scalp trader. So if you are indeed a scalp trader, then the best time frame to manage your trades will be on the 1 minute to the 5 minute time frame. Managing your trades on those time frame can give you an average gain around 100 to 200 pips. This is only based on the currency pair, gold. Like I do not know about the other currency pairs, but if you're a scalper, like your daily gains could be around 100 to 200 pips when you're trading gold, and if the gold market is also in a trending market. And the cons of managing your trades in those time frame is that you won't be able to enjoy the full setup. But hey, that is not an issue. You're a scalper. You don't care about the full setup. All you care about is reaching your targets with my plan. So you basically get in and get out in less than 5 seconds. But that's not the actual idea, but I do think that you guys get the idea of what I'm trying to say. If now let's say you are a scalper, and if you're a scalper, you're going to be managing your trades on a 1 minute, the 3 minute, or the 5 minute chart. Well, according to your trading style, you can choose which time frame you want to manage your trades. But in this scenario, we'll be choosing the 5 minute chart, and we'll be using the same strategy, the same logic to manage your running trade as a scalper. So, for example, we're looking for a sell move. We're waiting for the market to get into this sell area. So now we can see that the market is moving up. So when the market has broken below this low, then we'll be looking for a sell. Let's say we'll be placing a sell stop around here. And you are looking to maybe target this low around here. You're looking to maybe target this low around here. But you do not know for sure if the market will reach this area. But still, if the market doesn't reach this area, you want to capitalize on maximum profits before the market reverses somewhere. Let's say you do not know where the market will reverse, but you still want to end up in profit. So now we're looking for a sell move. Okay, based on the 5 minute, or sell move got activated. Okay, but when do you add your stop loss to break even? You do not add your stop loss to break even when your sell move set activated. So now we see that the market has created a failure swing around here, and then we have created a new lower low, and then the market is in the phase of creating a new lower high, but the new lower high isn't yet confirmed unless we create a new lower low. So the moment the market creates a new lower low again, let's wait. Okay, so now that the market has created a new lower low around here, now you'll be moving your stop loss to this new lower high. Your stop loss will be now around here, you see? And you can see you'll be following the same structure over and over again to make sure that you capitalize on the full move. The market has created a new lower low, lower high, lower low. Now you're placing your stop loss on this high around here. Now you're some minor percent drawdown because you want to capitalize on the full move, but maybe you do not know where the market will reverse. And like for example, your stop loss is still in its original position, but what if the market decides to reverse around this area and go to the upside? I mean, like you were still in profit, but you could not take those profit because you were not managing your trades effectively. So now that the market has created a new lower low according to the 5 minute time frame, we'll be moving your stop loss to this area. We're waiting for the market to then again create a new lower low. A new lower low hasn't been created yet. But one of the thing that I want to warn you guys against is like when you're going to be using the 5 minute and a 3 minute chart to basically manage your trades, you will always get stop ons, you know? Like, for example, you can sometimes place your stop loss above a high, but then the market comes out and stops you out and then go to the downside. Like, that is the only cons when you're going to be managing your trades on the lower time frame, you know? On the lower time frame, you will see lots of stop on, like stop ons happen there every time. So you need to be also wary on how the market breaks a high. For example, this wasn't a very impulsive break, so like this was a sign that it was a stop on, you know. But there's definitely more into it, but we're not going to be going into those things in this video. Like this video is solely focused on showing you guys how to manage your trade according to market structure. So now we're basically waiting for the market to create a new lower low. Once the new lower low has been created, then you'll be moving your stop loss to this area. Okay, now it has been created. Now you're moving your stop loss to one of these highs. Like these minor structure are also values, you know. You can also use them. But then again, I'll be explaining those things more in detail when I release my market structure video. But according to my concept, we have created a new lower hole. So now you're placing your stop loss around here to make sure that you enjoy maximum profit. Okay, a new lower low has been created in this area, and now your stop loss will be moved to this area. So now the market is trending down. You're definitely enjoying maximum profit. Now you're like 100 pips, 140 pips in profit, you know, but you're not sure if the market will reach this target area. And that is the reason why. But still, you're a scalper. And for example, if you were a scalper, it would be very obvious that you would not that your target that you would not be targeting this amount of pip, like 460 pip in one trade. Maybe you'll be targeting around 200 pip, you know. But then again, your target will be already reached. But let's say you're a scalper and you're thinking this trade, this setup can potentially give us like 400 pips. But how do you effectively manage your trade to gain some of that 400 pips, you know? If you're a scalper and you're managing your trades on a 5 minute, well, you basically move your stop loss to every lower high that has been created whenever a new lower low is created. So you basically do it over and over until you get stop out. You see? So then again, the market has created a new lower low. Your stop loss will be obviously be here. You know, the market has then again created a new lower low, and then your stop loss would be around this area, but then you would see that you get stop out. Why did you get stop out around this area? Because the market has reversed, you know. The market is no longer interesting in going to the downside. But even though you're you're basically moving your stop loss little by little on every new lower high that was created in the 5 minute chart, even though you got stop out and the full target hasn't been reached, you will still get stop out in profit. So if I calculate it, you would be still get stop out in 200 pips profit according to this concept, because one of the mistakes that some people do is that they leave their stop loss around this original position, and when the market is ready to reverse, they do not even get to enjoy the profits that they have made overnight, they get stopped out in a loss. So if you're the kind of person that are facing those kind of issues, then I believe that this video is for you. You know, like the full target hasn't been reached, but still you managed to end the day with profits. If you personally ask me what type of trader I am, well, I do feel like a day trader. But one of the mistakes that I usually make is managing my day trades with my scalping plan. And usually doing that prevents me from enjoying the full swings. Yes, even I struggle with certain things, but is it a journey? A journey we all need to go through and need to pass. Like, there's no perfect reader out there. We all go through our daily struggles. But like the most important thing is you need to learn how to deal with your daily struggles, You need to get to the next chapters. And one of the pros of managing your trade on the 50-minute to the 45-minute chart is that your average gain on gold can be around 200 to 400 pips. Well, I actually tested out on the chart, so I do know what I'm talking about. Like, if you're managing your trades on those time frame, you can have an average gain of 200 and 400 pips. And I don't see any cons on managing your trades on the 50-minute to the 45-minute chart as a day trader. Maybe some other people have other opinions about it, but this is basically on what I know. I don't see any cons on managing your trades on the 50-minute to the 45-minute time frame as a day trader. Like I can only see pros in it and not cons. So if you're like a day trader like me, then you'd be looking to manage your trade on the 50-minute chart and the 45-minute chart. You see? So for example, you're looking for an opportunity on gold, you're looking for a clear target, and you're going to be managing your trade on the 50-minute chart as you are a day trader. Okay, now like the most important thing is that you must look for a setup, right? And once you successfully identify your setup, then you'll be engaging into the long move or the short move. Okay, so based on the 50-minute, I'll be looking for a setup on the 50-minute. Okay, so now the market has tested my buy zone, and based on the 50-minute, I'll be buying around here and I'll be managing my trades on the 50-minute according to the 50-minute structure. So, for example, let's say you are targeting the all-time high, but we are not sure if the market will be reaching the all-time high. So every time the market creates a new higher high on the 50-minute chart, we'll be moving our stop loss according to structure. So the moment the market gives us a pullback and we then create a new higher high, then yes, we created a new higher high, then I'll be placing my stop loss here based off the 50-minute. You see? Because then again we created a new higher high, and now again I need to wait for the market to then again give me a pullback into discount, and then again give me a new higher high. And once I've gotten the new higher high around here, so we gotten the new higher high in just a bit. So now that we have gotten the new higher high around here, we broke structure to the upside, and now I'll be moving my stop loss around this area because you do not know for sure if the market will be reaching the all-time high. But still, you want to capitalize on most of your profit. Like, what if the market decides to reverse to the downside? You see, so you don't want that. Like, instead of leaving your stop loss here, you can move your stop loss according to structure to make sure that you capitalize on the maximum move. So now the market has then again created a new higher high. You place your stop loss below this low to make sure that you capitalize on the whole move because you never know when the market will reverse. And boom, the market has reversed and it basically stopped you out from break even, but still you ended in 340 pips profit. So I do need to make a video on the swing and the day trader, but the concept is still relatively the same. So I really want to see those out for you guys. And if you also join my Telegram channel, please also join my Smart Menu group. Like if you have further question on this certain concept, don't be afraid to ask question in the group chat for me to further guide you. The same thing goes for if you're a swing trader. If you're a swing trader, you're going to be managing your trade on the 1 hour and the 4 hour chart. And the pros of managing your trades on those time frame can give you an average gain of around 600 to 1k pips. Like that is a lot of pips to survive the month with just one trades. And I absolutely don't see any cons with managing your trades on those time frame. So let's go to the next chapter for me to show you guys practically on what I really mean. And also the same for a position trader, like the best time frame to manage your position trade is on the daily chart. Like the only con of managing your trade on a daily chart is because you need to wait a very long time before you see the necessary confirmation, before you take a step, before you do something. Like that's the only con of it, of managing your trades on the daily chart. You need to have a lot of patience. You have now reached the end point of this video. Now I also wanted to ask you guys, what should the next video be about? If you have an idea, don't be afraid to place it in the comment box. Don't forget to also like the video and subscribe to my YouTube channel if you have found my YouTube video very helpful. And don't forget to check my description below to pre-register for my upcoming mentorship. Thank you guys for watching. I'll see you guys next week with a brand new episode.